Ever feel like you're running on a hamster wheel, working harder and harder, but your money just keeps shrinking? Inflation is like a silent thief, slowly stealing your purchasing power. But what if I told you there's a way to fight back, to not only protect your savings, but actually grow them, even in times of high inflation? Get ready, because we're about to unlock the secret weapon: high-yield savings accounts. Welcome to Money Theory, where finance meets real-life stories. We simplify money management, investing, and wealth-building concepts through engaging stories, experiences, and practical lessons you can apply in your life. From budgeting tips to investment strategies, each video teaches you how to handle money wisely while keeping you entertained and inspired. Today, we're tackling a topic that's on everyone's mind: inflation, and more specifically, how high-yield savings accounts, HYSAs, can be your secret weapon to beat it. We'll dive into a real-life story, break down the key concepts, and give you actionable steps you can take right now to start making your money work harder for you. Let's meet Sarah. Sarah is a 32-year-old graphic designer working hard, paying her bills, and trying to save for a down payment on a house. She was diligently putting money into her regular savings account at her local bank. She felt proud of herself for saving, but something unsettling was happening. Every time she went to the grocery store, things were more expensive. Her rent seemed to go up every year. She was saving, but her savings weren't keeping pace. It felt like she was constantly losing ground. Then one day, Sarah stumbled across an article about high-yield savings accounts. At first, it sounded too good to be true. Earn significantly more interest on my savings? What's the catch? She thought. Skeptical but curious, Sarah decided to do some research. She learned that HYSAs are offered by online banks and some credit unions. Because these institutions often have lower overhead costs than traditional brick-and-mortar banks, they can afford to offer significantly higher interest rates. Think of it as them sharing the savings with you. So, what exactly is a high-yield savings account? Simply put, it's a savings account that pays you significantly more interest than a traditional savings account. We're talking sometimes 10, 15, even 20 times more. Now let's talk about why you need one, especially in today's economic climate. Inflation, as we've seen, erodes the value of your money. If your savings account is earning a measly 0 to 1% interest, and inflation is at 4%, you're actually losing money in terms of purchasing power. A HYSA, on the other hand, can help you keep pace with inflation and even outpace it, allowing your money to grow. Another major benefit of HYSAs is FDIC insurance. This means your money is insured up to $250,000 per depositor, per insured bank. So, you can rest easy knowing your savings are safe and secure. It's like a financial safety net for your hard-earned cash. Let's break down the key differences between HYSAs and traditional savings accounts. Interest rates. This is the biggest one. HYSAs offer significantly higher interest rates. Accessibility. Traditional accounts are usually tied to a brick-and-mortar bank, making it easy to deposit and withdraw cash in person. HYSAs are mostly online, meaning you'll primarily manage your account online or through a mobile app. Fees. Both types of accounts can have fees, but HYSAs often have fewer or no fees, especially if you maintain a certain minimum balance. Now let's talk about different types of HYSAs. While the core concept is the same, you might find variations. Standard HYSAs, offered by online banks and credit unions, providing a good balance of high interest rates and accessibility. Money market accounts. These accounts often come with check-writing privileges and may have tiered interest rates, meaning the more you deposit, the higher the rate. CDs, certificates of deposit. While not technically savings accounts, CDs are a close cousin. You lock your money in for a fixed term, and in return you get a guaranteed interest rate often higher than a standard HYSA. Just remember, you'll usually face a penalty if you withdraw your money before the term is up. Opening a HYSA is typically a straightforward process. It usually involves 1. Researching. Compare different HYSA options and choose one that suits your needs. 2. Applying. Online, fill out an online application with your personal and financial information. 3. Verification. The bank will verify your identity, often through electronic means. 4. Funding. Once approved, you can fund your account through an electronic transfer from another bank account. Before you jump in, here are a few key things to consider. Fees. Check for any monthly maintenance fees, transfer fees, or other charges. Minimum balance requirements. Some HYSAs require you to maintain a minimum balance to earn the advertised APY. APY versus APR. APY, annual percentage yield, takes into account the effect of compounding interest, so it's a more accurate reflection of the interest you'll actually earn. APR, annual percentage rate, doesn't factor in compounding. Always focus on the APY when comparing accounts. Accessibility. How easy is it to transfer money in and out of the account? Do they have a user-friendly mobile app? Taxes. The interest you earn on a HYSA is taxable income. You'll receive a 1099 INT form from the bank at the end of the year. Don't worry, it's usually a small amount compared to your overall income. So what happened to Sarah? Well, after doing her research, she opened a HYSA with a reputable online bank. She was amazed at how quickly her savings started to grow. It wasn't a get-rich-quick scheme, but it was a consistent, steady increase that made a real difference. Instead of feeling like she was constantly losing ground to inflation, she felt empowered and in control of her finances. And guess what? She's now much closer to achieving her dream of buying a house. All right, let's recap the key takeaways. Open a high-yield savings account. Don't let your money sit in a low-interest account. Shop around and find a HYSA that offers a competitive APY. Automate your savings. Set up automatic transfers from your checking account to your HYSA to make saving effortless. Review your savings regularly. Keep an eye on interest rates and inflation to make sure your HYSA is still working for you. Don't be afraid of online banks. Online banks often offer better interest rates and fewer fees than traditional banks. Embrace the power of compounding. The earlier you start saving, the more your money will grow over time, thanks to the magic of compounding interest. You know, managing your money can feel daunting, but it doesn't have to be. High-yield savings accounts are a simple yet powerful tool that anyone can use to fight inflation and build a stronger financial future. Don't let your money lose value. Take control today. If you found this video helpful, please give it a like, subscribe to our channel for more money-saving tips, and share it with a friend who could benefit from learning about HYSAs. Also, let us know in the comments, do you currently use a high-yield savings account? If not, what's holding you back? We read all the comments and love hearing from you. Thanks for watching, and remember, your financial future is in your hands.